Hi traders, Nathan Bray here from ACY Securities. Well, we have started off this week with a real negative influence from the data coming out on the United States and around the world for that matter. So let's just do a quick wrap up. So we've got the PPI data, the Producer Price Index in the US is negative. Retail sales is coming out. It's negative. We've got the building and housing industry data coming out. It's also negative. And to top that off, the US debt ceiling's been reached. So what does that mean? It means the credit card max that they put in place for themselves is going to be surpassed. So the politicians now have to turn around and pass some laws to allow them to borrow beyond the ceiling that they put in place. It's like a gambler saying, cut me off if I lose X amount of dollars. Well, the US is like that gambler right now, alongside lots of really negative data coming out. We had Fed President Bullard this week coming out and saying, yes, we know we're getting some negative data out of the US and the economy is contracting, but we're going to keep raising rates beyond the limit of where we expected, and we're going to do it aggressively. Then you've got Loretta Mester, another Fed president, coming out and saying, look, yes, inflation isn't going down as we expected, but it's not going up as fast. So that's kind of like France in the World Cup final saying, yes, we did lose, but we only lost on penalties, okay? And they had Messi. This is the kind of logic that's coming out of the US at the moment. But keep in mind, it's not just coming out of the US. This isn't a US bashing session, okay? If we look at the Bank of Japan, they've now got inflation and they're not raising their rates from a negative interest rate stance. And that created a lot of volatility in the market this week. We're also seeing around the world CPI data or inflation data coming out. It's also showing that inflation is staying up there and putting countries in a position which are already under pressure and are already contracting. They're now in a position where they have to keep raising rates, or in effect, they could drastically harm their currency. And to top it all off, we've got the Pentagon coming out and saying they don't know where over $200 billion has been spent and where it's gone overseas. Misappropriated funds. It looks like the US economy, the US leadership, okay, and their inflation problems looks like a bit of a disaster. So there is a lot of talk at the moment suggesting we need to sell off this US dollar. We're seeing gold now reaching 1920, the previous all-time high in 2011, which it failed at during COVID and it failed back below during the Ukraine military action. Prices up there right now. Are we going to see gold really start to put in an uptrend here and break through that double top? That's a question that I'm asking at this stage. This US dollar index now, it has pulled back to around 101.20. Now, it's sharply weakened, this US dollar. So I'm looking at the fact that it's retraced back to about a 79% fib retracement level on the whole strong move of last year. So until we really see price get below that 101 level and hold below it, I'm still not losing hope in the correction that we've seen being enough for this US dollar to continue the longer term trend. Now, why might that be, as I've given you all this negative US news? The problem is we're seeing something similar happen around the world. We've got unemployment rising in Australia. Jobs data is missing expectations. We've got similar inflation data coming out on the UK. We've got Europe data coming out next week. We're also seeing problems with the Bank of Japan. So we're seeing problems all around the globe. And now that we've seen such a strong correction in this US dollar, I really want to see it change the overall trend. In other words, break below this 101 level, this 101.20 level, okay? That's the level on the DXY or the dollar index that I want to see broken and price fail underneath it. Then we have a long-term change of trend, okay? But at the moment, price is really hovering around these levels. And if the US economy weakness is taken into consideration, have we seen a correction back to a level that we could trade off? So the takeaway from all of this negative data coming out around the world is to keep something in your trading that is really stable. So one thing I'll look at is making sure, say, that 10-year yield is staying steady and stable. It's not shooting up. It's staying steady around 3.3 to 3.5%. That being said, I'm using that in conjunction with this dollar index. This dollar index now has retraced 79% from the move that it made last year. So down at a really key technical level. If it can hold here, we could see a consolidation or a continuation of that longer term trend. They're the things I'm keeping an eye on, and good luck with your trading, everybody, and have a great weekend.